Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. I am Mohammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Today we will discuss on chapter 10, and this is financial statement. Today is our first lecture on this chapter. Dear student, after this lecture you can able to know about the financial statement. You can able to know about the types of financial statement. You can know about the types of financial statement, and you can know about the statement of comprehensive income. Dear student, what is financial statement? Financial statement are reports prepared by a company management to present the financial performance and position at a point in time. That means it is a statement which is prepared by its management to show the financial performance throughout the whole year, what is the performance of their financial activities. A general purpose of set of financial statement is usually includes a balance sheet, income statement, a statement of owner's equity, and a statement of cash flow. Dear student, you know that an organization is doing business for earning profit. Their main objective is earning profit. And with a view of earning profit, a organization is established and they would like to know their profit at the end of the year. Then how they can know their profit? Through accounting. And accounting, in accounting, earlier you do journal, you do ledger, you do cash book, you do trial balance, but from there you cannot find the profit. For find out the profit, we have to prepare the financial statement. Dear student, so this is very important for an organization. Dear student, now types of financial statement. Dear student, according to IAS, all of you know what is IAS. I have discussed earlier, beginning of the year. Dear student, IAS means International Accounting Standard. International Accounting Standard. That means all over the world, accounting is running in similar way by the leadership of IAS. International Accounting Standard Committee IASC declared the rules, and the first rule is that in first rule this says that financial statement are 5 types. That means an organization will prepare financial statement in 5 parts. Number 1, the statement of comprehensive income, the statement of changes in equity, the statement of financial position, the statement of cash flows, and notes. That means some notes about all this information. Dear student, the statement of comprehensive income, that means from this statement we will find out the profit, the main desire of a businessman to earn profit, and from the statement of comprehensive income we will find out the profit or loss. Then changes in equity, from this statement we will find out the amount of owner's equity, that means how much money, how much worth, how much asset have the owners in the business, that we will know from the changes in equity. Then a statement of financial position, this is another important statement. From this statement we will find out the asset and liabilities of the organization, that means whatever fixed asset, long term asset, current asset, other types of asset the organization have, and whatever the liabilities they have, that we will know from this statement. And fourth one is statement of cash flow, how much cash the organization will receive from different sources and how much cash goes out, we will know it from this statement. And lastly, some notes comprising of summary of significant account policies and other explanatory information are in the financial statement is given here. Dear student, these are the types of financial statement prescribed by IAS 1. This is very important for MCQ. IAS 1, according to the IAS 1, how many types of financial statement? It is 5. So dear student, learn this too very carefully. Dear student, now the statement of comprehensive income. That means what is the statement of comprehensive income? Dear student, earlier I have told you that in comprehensive income means from this statement we will find out the profit or loss of the organization. Look at here. The statement of comprehensive income refers to the statement which contain the details of the revenue, income, expense or loss of an organization. Dear student, there are two types of organization you know. Some organization give us goods, some organization give us service. So the organization which give us service, they are service related organization, and the organization which give us various type of goods, they are merchandising organization. That's why income statement also two types, for service related organization and for merchandising organization. Dear student, in service providing business organizations, net profit is found after subtracting service providing expenditure from service revenue. That means in service related organization, net profit is found out after subtracting expenses from income, service revenue. And in merchandising business, gross profit is found after subtracting cost of goods sold from the amount of goods sold. That means this type of organization we have sales. So from amount of net sales, we will subtract the cost of goods sold. Then we will find out the gross profit. Then in second step, operating profit is found after subtracting operating expenditure from gross profit. That means from gross profit, we have to subtract operating expenditure. Then we will find out the gross profit. Then next step is find out the net profit before tax. Dear student, we will find out net profit before tax by adding other income with operating profit, and we have to subtract other expenses from operating profit. Then it will be your net profit. Dear student, this comprehensive statement is very important. Again, I would like to discuss. Dear student, look at, there are two types of organization: service providing organization like lawyer, doctor, engineer. Their accounts are service related. On the other hand, those who sell goods, clothes, groceries, fruits, and other commodities, for there we have to do merchandising accounting, and for merchandising, gross profit is the another step. Dear student, for service providing organization, it is very easy one, just only one step. Total income will be subtracted by total expenditure. That means whatever income of that organization, whatever service revenue they have, we have to subtract it. We have to subtract expenditure from it. Then you will find out net profit. I hope you understand. Again, I am telling, total expenditure of the organization will be subtracted from their service revenue, income, total income. Then you will find out the net profit of service related organization. But when you will do accounting for merchandising business, that time net profit, for find out net profit, you have to follow three steps. First step, you will find out gross profit. Second step, you will find out operating profit. And third step, you will find out net profit before tax. So for first step, net sales will net sales at first you have to find out, then cost of goods sold. So cost of goods sold will be subtracted from net sales, then you will find out the gross profit. Then operating profit, from gross profit you have to subtract operating expenditure, then you will find out the gross profit, sorry, operating profit. Then lastly, net profit, it will find out, we have to subtract operating other expenses from operating profit, and we have to add other income with operating profit, then it will be net profit. I hope you understand. Of course, you will collect the class note so that you can easily understand. Dear student, now homework. You will write what is financial statement, how many types of financial statement, what is IAS, what is the statement of comprehensive income, how gross profit, operating profit and net profit is determined in an organization. Dear student, thank you everybody. Stay home, stay safe. May Allah help all of us. Allah Hafiz.